A dollar yen trader discusses his technical analysis. A dollar yen trader discusses his technical analysis. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. The title of this video is A Dollar Yen Trader Discusses His Technical Analysis. Alright? So today we're going to analyze the dollar yen. I want to discuss, how I analyze the dollar yen. I want to share with traders technical analysis, relating to the dollar yen currency pair. Alright? So the first question that I ask all the time when I'm trading the dollar yen, because the dollar yen can be a little bit tricky for traders to trade because of the hedging activity in the Forex market. Alright, so some traders are selling another currency pair, alright, and they will just go, and buy the dollar yen, just to hedge their positions, alright. Or other traders, may sell other currency pair and may go and buy the dollar yen just to hedge their trading position. So due to the hedging activity in the Forex market, especially the dollar yen can be a little bit tricky for traders to trade. Alright, but I will discuss with you how I analyze the dollar yen. Another thing I need to share with traders in this video is that there are a lot of trading robots that are trading this currency pair. So when you are trading the dollar yen, you are competing against automated trading systems in the Forex market. Alright, so there are a lot of computers that has been developed to trade this currency pair. Before the high frequency traders, one of the currency pair that has been traded by the computers is the dollar yen currency pair. So be aware of it. So the first question first. What is my first question? The first question I ask whenever I am trading the dollar yen is, what is the current market pattern? Alright? So you will do exactly the same thing. You will ask that question all the time. What is the current market pattern? For traders that are new to us, there are three market patterns: the rising channel, the declining channel, and the horizontal channel. So I want to know the current market pattern. So which time frame do I go? I go to the monthly chart. Alright, so here we are on the monthly chart. The current market pattern is what? A rising channel. So I want to show you how I draw this channel. You see, I choose the low of this month here, the month of November 2012, the low of November 2012, and I join in with the low of August 2014. So with these two low, the low here and this low here, allow me to draw the first line here. That's the first blue line here. Then I choose one point at the top here, which is the high of, let's show you, the high of May 2013. This high here, I choose it. And 3 points we need. So the first point is the low here, and the second point is this low here, and the third point is the high of May 2013. And what I'm doing here at this point here, I just draw a line that is parallel to my first line. So this is my first line here, and I choose the third point here, and I draw a line that is parallel to that. You'll also notice that I have also drawn the median line of my channel. This is the median line of my channel. So the question that I asked first, what is the current market pattern on the monthly chart? No weekly chart, no daily chart, on the monthly chart. Now the current market pattern is a rising channel. When we see a rising channel, what is it telling us? It's telling us that the momentum or the market sentiment is bullish. Alright? When the channel is declining, it's telling us that the market sentiment is bearish. Now, when it's horizontal, it's telling us that the market sentiment is neither bullish nor bullish, but it is a balance. It's consolidating, so it's balance between the bulls and the bear. All right? But It doesn't mean that when we have okay, a rising channel, we cannot sell. We can sell. You can see here that though we were in a rising channel, there were times when traders sold it, okay? It doesn't mean that we cannot sell. But when we are selling in a rising channel, we want to make sure that we are selling at a key level, key resistance level. And it is also a contra trend. So there is a risk in that trend, unless it is a conversion point. All right, I will not dwell on the conversion point. I will sell traders to stochasticmarket.com. Click on conversion signals. Okay. So when we see a rising channel, the first thing that comes into my mind, I will say to myself, priority to bullish signal at the key support levels. Now, if I'm selling in this case, all right, which I'm going to explain to you now, I will sell at the key levels, but that is a contra trend, which means it's a bit risky because the market pattern is a rising channel. So whenever we are selling, okay, when the market pattern is a rising channel, we need to keep our eyes on the trend and monitor it carefully. As you can see here, after you draw this 3 point here, you see here, so from 2013, you have this line already in place. So the best place to buy, because you see here, it pulled back nicely here after you see the point where, so be careful, be careful, be careful here. I have this point, okay, these points, and these points, okay, allow me to draw my channel, okay? So now, you see here, as it's pulled back like this, I have drawn my line here. Now, you see the high of, you see the tail of this candle goes above. You see how this candle went fast? It's a beautiful place. You see here? You see this candle here? So you will draw, you see, you put a line at the high of this candle here, the monthly candle of the month of August 2014, with a high there, because you have your 3 point in place. And then you will use a top-down trading method to take the trade. You see how it went? The whole month fast. Pew! And then it went again up a bit before trader took profit. Trader who bought it here took a bit of profit, price pulled back again to the same place. And you see the tail, and people reload it again, and it went up again. All right? You see now? So in this scenario, the current market pattern is a bullish, okay, channel. Okay, so priority to bullish signal. Where can we buy? So because you have a rising channel, okay, the best place to buy is on the edge of this channel. But there is one condition you need to remember. The price must display a new higher high before retesting this trend line, okay, to validate this trend line as a valid support level. If the price failed to display a new higher high before retesting this trend line, is not, okay, completely bullish. This is about the language of the price. A new higher high and a pullback on low volume, retesting a bullish trend line. We can also look for opportunity to buy on the edge of the median line. This can be a little bit tricky for new traders to buy on or near the median line of the rising channel. So in this scenario, what we will prefer, you see here, it's becoming a little bit tricky. We will prefer the price to run away from the median line, to deviate away from the median line, probably to retest the top of the channel before pulling back, okay, to retest the median line. But as you can see, it's not as strong as it is supposed to be. You can see that the price is not pulling away from the median line. She's hanging around the median line here, all right? I will explain to you why, because there is a resistance here. There's a hidden resistance here, which I'm going to show you in a minute. It makes sense? We can also look for opportunity to buy at a key support and resistance level. Now, I'm talking about the horizontal support and resistance level. See, I have some line here. Okay, the one here, the pink line is a 1, 2, 3, 6, 3. Do not forget that level. 1, 2, 3, 6, 3. There is another level here that I want to share with you. Moment, please. Let's move this one away. It's a 1, 2, 2, 7, 3. Another key level. And the blue line here, this is a very, very important support level. Do not forget this level that I'm going to tell you now. 1 to 1, 6, 8. All right. There is a greedy target, bullish target, a greedy bullish target right here at 133.65. But there is another level here I want to tell you now, is at the level of 127.55. Now, for traders that are trading this currency pair, do not forget 127.55. Now, it's a resistance level. If the price comes near the level of 127.55, we will look for opportunity to sell. Now, remember, the market pattern is bullish. If we are selling, we must sell at a resistance level. And the resistance level is at 127.55. It doesn't mean that if the price arrives at that level, we just go and sell anyhow. We must see a value set up and then a signal, and before we can sell. We don't just sell because we are expecting to sell, okay? But remember that the level of 127.55 is a key resistance level. All right, I will explain to you why that level is a very important level in a minute, all right? But where the price is now, you see, is sitting on the support level 123.63, the pink line here, all right? So as long as the price finds support above 123.63, all right, priority to bullish signal, this is a support level. But look carefully, as the price going up from the pink line, you know, there's another line here, which is the median line of our blue channel. Are you with me? So if it's pushing it, okay, now it's above, you see here, now it's above this level here. All right, this level here, we are not below it here. All right, so if it's going up, the next key levels that we need to watch is a 127.55. But before the level of a 127.55, there's another level that I'm going to tell you in a minute. Let's go to the quarterly chart. Is the high of last quarter. So this is a new quarter that is beginning now. You see here, we are in a new quarter, isn't it? All right. A quarter is a 3 month, okay? All right. So we have January, February, March. That's one quarter, all right? Okay. April, May, June. That's another quarter. All right. Now we have July, August, September. This is the current quarter. It's not yet completed, but this quarter here, the quarter of April, May, June is completed. So that's what I'm saying to you. You need to watch also the level, which is the high of the last quarter here. It's at 125.85. 125.85. So the current resistance level that we must watch is 125.85 and also 127.55. Remember that the 127.55 is a very important key levels. The 125.83, the 125.85 is the high of the last quarter. It makes sense? Because the price is in a rising channel, we are giving priority to bullish signal. The price is always moving from a support level to a resistance level. So we want to know where are the support level and where are resistance level. We are giving priority to bullish signal at a support level, the setup, the signal, and the low risk entry point. As the price finds support and we receive a clear-cut signal to buy, we enter the trend at the support level. The price going up, what is the next resistance level? The nearest resistance level is the high of last quarter, 125.85. Above that level, there is a better resistance level, which is 127.55. Do not forget 127.55. The greediest bullish target is at 133.65, which is the red horizontal line. Let's go back now to the yearly chart, where I'm going to show you how I come to these numbers. All right, so the first question that I always ask, talking about a dollar-yen trader discusses technical analysis, all right, we're asking a specific question. What is the current market pattern for the dollar-yen? The current market pattern for the dollar-yen is a bullish channel, okay? A rising channel, okay? So we will say priority to bullish signal. Now, how do we buy? We want to highlight the key support level. Where are the key levels? Where are the key support level? We want to buy at the support level. We can buy along the trend line, as I showed you at the beginning. I don't want to repeat myself. Okay, the lower part of the channel, and also near the median line. as the price going up, we want to know where are the resistance levels. Price going up from a support level to a resistance level. Price going down from a resistance level to a support level. All right. There is a major resistance level that we must watch. It's a 12755. But before that, there is another resistance level which is at a 1 to the high of the last quarter is at 12585. Am I correct? 12585. Okay? It makes sense? It is also powerful. Going back again to the yearly chart, my friends, talking about technical analysis relating to the dollar yen. What I say to traders, the year 2008 is a very, very important year. One cannot trade stocks, commodity, currencies, okay, without paying attention to the high, the low, and the median line of 2008 is critical. It is critical. This is what the smart money is watching. My friend, pay attention. You see, the red line here, are you with me? Am I talking to myself? You see the red horizontal line, I hope you can see your chart, is the high of 2008. That high is at 11068. The second red horizontal line here below where I'm moving my cursor now, that's the low of 2008, is at 8709. 8709. The median line of 2008 is somewhere near, it's not the exact level, but it's somewhere near the level of 98631. 98631. So with that information, we have the range. The range is the space between the high and the low. So the range of 2008 is represented with this vertical line that I'm moving on my chart. You see, it's confined between the high and the low of 2008. So this is the range, okay? The width of the candle of 2008, that's the range of 2008. If the price goes above the high of 2008, we will project that range to the upper side. If the price dips below the low of 2008, we will project that range to the lower part of the chart. Because you see now the price above the high, we project it to the upper side. This is what we call market geometry. You see now, by projecting the range of 2008 above the high of 2008, we bring us to this red line here, which is giving us the resistance level that I gave you before, the ultimate bullish target zone, 13365. You see now? But apart from that level, if we divide, okay, our projected channel into two, you see this channel here, the new red channel on top here, we divide it into two. The median line is the blue line here. That's why I was saying to you the level of 12168 is a very, very important level. In fact, I can tell traders now, if at one point this currency pair return back below the level of 12168 and the final resistance is bearish. Now let me repeat myself again. If this currency pair goes up and turn around and come back below the level of 12168 and find a resistance below the level of 12168 is bearish. It shouldn't go below the level of 12168. If it violates the level of 12168 and find a resistance, we'll use a top-down trading method to look for opportunity to sell this currency pair. Remember that the current market pattern for the dollar yen is bullish. Therefore, priority to bullish signal using a top-down trading method. If we are selling, if we receive a sell signal, that is a contra trend because it is against the current market pattern. We need to monitor all the bearish trade carefully because they are against the current market pattern. We can decide not to take at all the bearish signal until the price returns back below the level of 12168 and find the resistance below it. It makes sense? It is also powerful. So with the range of 2008, which I show you already, we project it to the upside, okay, and then we divide it into two, giving us this level here, 12168, which is the median line of the top channel. There is another level that I'm trying, my friend, to tell you now. I already told you the level of 12755. How do I come to 12755? I divide again. You see this smaller channel here between the red horizontal line here and the level of 12168, this smaller one, this section here. Are you with me? Okay, let's highlight it again. This smaller channel here, we divide it into two. Okay, and somewhere near the level of 12755, that's not the exact level, that's not the exact median line, but roughly around that zone, there is a median line for this smaller channel, which is 12755. If the dollar yen continue to go up and hit that level of 12755, it may go above it a little bit, only to return back below it. But if it hit that level, we will, for instance, if you are already buying the dollar yen, all right, and the price comes near that level, you need to take your profit or secure your gain. You may come out and wait until you see a clear-cut sell signal. All right, they set up the signal and a low-risk entry point without violating the market pattern on any time frame. So because the current market pattern is bullish, if I go to the hourly chart, I'm giving priority to bullish signal. I want the price to go, for instance, suppose we are, I prefer the 2-hour chart. Suppose we are on the 2-hour chart. I want to buy also in a rising channel because the current market pattern is bullish. So I will draw my channel like this, okay? I'm looking for a channel also on any time frame, whether I'm on a 3-minute chart or a 5-minute chart, I'm looking for a channel, the point where I can buy. But if I want to buy even on the hourly chart, my friend, I want to buy on or near a key level from the higher time frame. The level that I will tell you, see the pink line here, 12363, all right? The orange one, 12272. Though I change my time frame to the hourly chart, I want to buy near those levels or on or near the trend line from the higher time frame. It makes sense? All right, it makes sense. It is also powerful. So we do not want to violate the market pattern on any time frame. Now, very often traders will purchase a trading system, but traders have difficulties to use trading system. A trading system does not trade for traders, but traders use the trading system to trade. Now, the most important trading tool is the trader. Now, how do you use the trading system? You will find a value setup, then you will select. So if your trading system gives you a signal to buy, you want to find what setup has created the signal. A setup will create the signal, and we want the signal to be at the key levels. Now, if one is taking the signal, one should know the current market pattern. Buying on the edge, managing the trade, coming to the market at the right time, at the right place. Okay, it makes sense? We don't want the video to be too long. Let's see how long we have been talking now. We have been talking about a dollar yen trader discusses, his technical analysis. So currently, the discussion talking about dollar yen, the Federal Reserve has told the market a few years ago that they will put up interest rates when the economic conditions are favorable. So far, they have not yet put up the interest rate. The discussion continues to say that they will put it up at one point. So putting up interest rate in the United States means that, appreciation of the dollar against other currencies, especially the yen. So interest rate going up in the United States, the dollar, the US dollar will strengthen against the yen. All right. So, but so far they haven't made that decision. But the market is expecting the Federal Reserve to put up interest rate since 2012. They were talking about it. So the market continues to push. You see all the bullish candle here, pushing it up. But the dollar yen is approaching a key resistance level, 12755. All right. The market is ahead of the interest rate, going up. So the day that they will put up interest rate, the dollar may go up for a while, only to come back down because it's already priced into this currency pair already. It makes sense. Now let's go back again to the we see here, let me show you something also. Let's go back again on the yearly chart. You see the range of 2008 right here. You see here. So this is the range of 2008. Okay, all right. So that range we divide it into two. Okay, you see how the price in here we are. You see here in 2014, the price pulled back near the median line of the range of 2008. This is, you see this point here, near the median line. That's what professional load it again right here. All right. It makes sense. You see the median line of the range. This is the range of 2008. So 2008 candle here has been completed. The price went down, blah, 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 returned back into the range. You just highlight the high, the low, and the median line. Right here, there was a bullish, you see here, price pulled back on the edge. Let's color this now, which color? Light green. Okay, and now we go to the monthly chart, and you'll see the reaction of the market as the price is approaching. Okay, that this is the line I'm talking about. You see here. Okay, the pink line here. You see here, pull back near it, and the people push it back up. Okay, this is how the people sold it near the median line, and you see here price went up near the median. These are key levels that the professional are watching. Okay, here again you can see, if you look carefully at this candle here, which is the top, the high, near the high of 2008, the price went above it a little bit, but people sold it again here. You see the tail of this candle, people took profit here, price went back down before going back above it. It makes sense? It is also powerful. So the level that we are talking about is the high here, this ultimate greedy bullish target 133, okay, 68, all right, and also 12755, okay, and the pink line here 12363, the orange line 12273, and this key, okay, the media line of okay, the projected channel 12168. So as the price continues to go up now, it's above the level of 12363, which is the pink line, prior to bullish signal. But be aware of the high of the high of last quarter, 12585 and 12755. These two resistance, we cannot ignore it. The current market pattern is bullish, but there are resistance ahead of us, 12585 and 12755. If the price break above the level of 12755 and find a support, the next bullish target is 13365. But if the price find a resistance at 12755 and start going down, the ultimate target is this level here, 12168. As I told you already, if it did below 12168 and fail to find a support, but instead find a resistance below 12168, we will now, okay, give priority to sell signals. But at this time, we can only give priority to bullish signal because the market pattern is bullish. If we change time frame, now I'm on a 2-hour chart. Okay, you see my channel is now in place. Okay, we have a channel. So if the price, you see here, is trying to go below it, okay, so how do we trade it? We project our channel. See this channel here, we project it down, okay, to detect the oversold zones. Okay, it makes sense, all right? So traders that are following us should be able to do this now all the time. Automatic switch, don't forget. All right, sometimes traders do forget, but do not forget, okay? Do not forget, okay? Do not forget. Stay focused and do not forget, all right? It makes sense? All right, draw lines on your chart. So there is a bearish trend line like this on a 2-hour chart, okay? See this red line here? So in my view, if I want to buy now, looking at this resistance, you see the red line that I draw here near the level of 12500. If I want to buy, I don't want to buy here now. Okay, I don't want to buy here. All right, I would prefer to buy above the red line. So break above the red line and find a support, and I will look for opportunity to buy. But so far, the way it stands now, I would prefer instead to buy either here, see my projected channel, either on the edge of this channel or somewhere near the median line right here. Attention, anytime we want to buy, remember the price must be in a rising channel. So be careful, because if you start going in a declining channel here and we want to buy, we want it to come out of the declining channel. But if you are buying a declining channel, it's risky because the market pattern on the 2-hour chart, if it's in a declining channel, is bearish. All right, so pay attention all the time to the market pattern, okay, if you want to buy. So if, for instance, it pull back like this here, and I want to buy here, it's a little bit risky because we have a high, a lower high, and a lower high, and price display a lower low. But if I want to buy here, I want to be very careful. The best place, I'll decide to buy somewhere here or above the red line, step by step, looking for opportunity to buy or sell around key levels. This is the end of this video about a dollar-yen trader discusses his technical analysis. In this video, we start asking the specific question: what is the current market pattern? The current market pattern is a rising channel. How did we find the market pattern? We went to the monthly charts, drawing, okay, our channel. We also draw the median line of the channel. Now, a bullish channel is telling us that we must give priority to bullish signal. Next, where are the key support level and resistance level? Because the price always going up from a support level to a resistance level. If we switch a time frame, we must draw our channel, and we must not violate the market pattern, the rising channel, on any time frame. So if I switch from the monthly chart to the 2-hour chart, I want to buy on the edge of a rising channel. If I switch to the 5-minute chart and I want to buy on the edge of a rising channel on or near a key support and resistance level. It makes sense? We must also use a top-down trading method, the setup, the signal, and the low-risk entry point. What time of the day it is, okay, you see now? So you want to enter a trade, you check the clock, all right? So the time now is 2 p.m. in London. In exactly 20 minutes, New York will be open. So the best scenario is to wait for the market to open, the first 30-minute candle to close, and then we place our trade. If you want to swing trade, we will prefer to enter the trade on Tuesday. So the Monday candle is closed, all right? And then Tuesday, we look for opportunity to enter the market after New York is open. It makes sense? Steadily. The time of the day, the market environment. What is the current market environment? So the first week of the month is gone. Now it becomes a little bit easier, okay, to trade up to the 15th of, okay, the month. This is about the market environment, okay? What time of the day we should enter the market, where we should enter the market. This is about support and resistance level. What is the current market pattern, all right? We must always use a top-down trading method. Do not trade on a single time frame. You see, we use the yearly chart, the monthly chart, okay? And also, we use the 2-hour chart. All right, it makes sense? The level of 12273 is the short-term equilibrium price level. For the dollar-yen, trader must watch this level for the next 2 weeks. 12273 is the current short-term equilibrium price level for the dollar-yen. This level will remain in place for the next 2 weeks. We will prefer the price to come near the level of 12755, and if it's coming down, we are watching this level of 12273. We don't want to forget that level for the next 2 weeks or 3 weeks or so. I hope you have learned something from this video also, and I will put into use, okay, to make excellent dollar-yen trading decisions. If you like this video, please give us the thumbs up. If you dislike it, make sure you give us the thumbs down, okay? But if you have any comment, why you disagree, put your comment below. You have any question, put it below. You want us to record video about a specific currency pair, put it below, and we will get back to you. If you love this video, all right, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, all right, feel free to subscribe to our channel. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about a dollar-yen trader discusses his technical analysis. Speak to you soon.